So in this segment, we're going to be talking about a funny video, couple of topics. This is funny. I don't care what anyone says. So the EU. This is according to the governor of the Bank of England, by the way. The EU is engaged in various serious escalation over UK financial services, says the Bank of England. So this is mainly over equivalency, and we're going to talk about why under people like this prick here, we're not going to get equivalency. So the Bank of England governor Andrew Bailey has accused the European Union of trying to poach businesses from the City of Europe in the wake of Brexit, labelling the bloc's recent activity a very serious escalation. So, what we can see here is that the EU are trying to poach, business from the UK. And the thing is, right, I don't blame them because we are competitors now. We have to compete. We're no longer friends. We are competing with each other. That's the way the world works. Mr. Bailey told the Treasury Select Committee on Wednesday the EU now seems more interested in taking euro-dominated derivatives clearing business out of London and into the EU than making sure the UK's regulations are equivalent to the bloc's for financial stability reasons. And again, I don't blame the EU for this. This is up to them. We are competing with them now. We're no longer allies. This is how the world works. We are in competition for the EU for jobs, businesses, and tax revenue. That seems to be where the debate is heading, he told MPs. I am not surprised by that. Brexit has been the stimulus to revise the debate. This debate, the governor said it looked like the EU was preparing to exert regulatory pressure on EU financial firms to shift their activity out of London and into the EU, and that's up to them if they want to do that. And it's up to these firms if they want to stay in the UK or set up a subsidiary here and move most of their work back to the EU. A document from a European Commission working group was reported by Reuters this week to show Europe's largest banks are being asked to justify why they should not declare derivatives in the EU. Frankly, it would be a serious escalation of the issue, said Mr. Bailey, and suggested such pressure would be of dubious legality. Well, if you've got a problem with it, the courts are there, my friend. I have to say to you that this would be highly controversial, and that would be something that we would have to, and want to resist very firmly. Mr. Bailey did not specifically specify what form that resistance would take, saying it would be for ministers to decide. I'm not going to obviously say how the government would react to that because that's for the government to think about. And we will work very closely with them on this, but it would be a serious escalation, in my view, on the issue. It would be an escalation, but we will talk about the governor of the Bank of England also threatening to escalate as well. So the EU granted the UK temporary equivalence in September for derivatives clearing, enabling the activity to continue to take place in the City of London after the Brexit transition on the 31st of December, something they didn't actually have to do once again. The UK had hoped to attain full equivalence from Brussels for clearing and also other financial activities, and is in talks with Brussels to produce a post-Brexit memorandum of understanding on financial services due next month. But Mr. Bailey said that the recent attitude of the EU suggested that equivalence was a sideshow, and the EU's real agenda seemed to be a location policy of shepherding as much lucrative financial service activity out of London and into the bloc as possible. Once again, I have to keep stressing this? We are competing with them. And this is them, going for it. This is them taking business out of the UK because, in the end, the interest is for them to take back as much as they can from the UK, because it's better for the EU in that sense. In his Mansion House speech earlier this month, Mr. Bailey warned the EU seemed to be trying to cut off the UK on financial services, which he said would be a mistake. A temporary equivalence for UK derivatives clearing by the EU expires in the middle of 2022. The UK has not granted equivalence by the EU for EU share trading. That has already resulted in billions of trading activity shifting out of London into mainland Europe. And so we've got to ask ourselves, what are the key reasons why the EU would not grant its equivalency? One is they want to take business from us, which is fine, which is what you do when you compete with someone. But also it's the fact that the UK haven't made our position clear when it comes to financial regulations. And we'll be talking about that in a second, because the governor here is mad that the EU are not giving us equivalency. because the EU want us to tell the EU want the UK to tell the EU what is our next move, what are we going to do with financial services, right? And you've got to wonder when the governor of the Bank of England says unrealistic and dangerous to stick to EU banking rules after Brexit. The governor of the Bank of England, you've got to wonder why would they give us equivalency if they know we're going to plan on doing deregulation shortly. How can you grant someone else equivalency to play by the same rules when you know that they're going to play by lesser rules than you? Why would you do that? You'd be an idiot to do that. You'd be a simpleton to do that. Why? Because you will not be playing by the same standard. That's why. Be like playing Yu-Gi-Oh against someone where they can draw 2 cards and you can only draw 1. You're not going to play that game. Why? Because it's unfair. So this is just the stupidity of this man, the governor of the Bank of England. I miss Mark Carney so much. He was a much smarter person than this guy here, honestly. So we'll go into this piece now. It would be unrealistic and dangerous for the UK to stick to EU banking rules after Brexit, the Bank of England governor Andrew Bailey has said. In his annual Mansion House speech to the City of London, Mr. Bailey also warned that proposals to move to a low regulation model would not benefit the UK's financial sector, and this is something we've talked about also in the past. So this is about the agreement stuff. Billions of pounds of share trading has already switched from London to mainland Europe, specifically the Netherlands, and the city is seeking to limit further damage caused by Brexit. Mr. Bailey said in his speech, delivered virtually, the EU has argued it must better understand how the UK intends to amend or alter the rules going forwards, which is something we've spoken about. It is a standard that the EU holds no other country to. But the thing is, right, we were interlocked with the EU single market, right? No other country has been in the situation where they have left the single market like this. So obviously the EU, for us to be granted equivalency from where we were, which was being equivalent, right? We went from equivalency to now stepping away from that. The EU want to know where we are going, what direction we are going in, and the UK are like, oh, we don't have to tell you that. And now he's saying it's unfair that the EU are asking us where we're going when it comes to regulations, which is not an unfair question to ask, especially when we want equivalent rules with the EU, equivalent access, basically, when it comes to financial services. I hope that made sense. He added, it is not acceptable when the UK rules govern a system 10 times the size of the UK GDP, and is not the test, and it is not the test up to assess equivalence. I don't know what that means. Hopefully someone can clarify that one. I couldn't figure it out. The governor put forward 2 rule changes that the UK plans to make, including tweaks to current EU rules on how small banks calculate assets and on insurance. So again, if you're going to start changing things, how can the EU grant us equivalency when we've changed our rules? And, if these are deregulatory moves, which we're not 100% sure about, how can the EU grant us equivalency when we're not playing by the same rules? It doesn't make sense. But Mr. Bailey said, let me be clear, none of this means the UK should or will move to a low regulation, high risk, anything goes financial centre and system. This is something we've talked about in the past with Barclays. We have an overwhelming body of evidence that suggests such an approach is not in our best interest, let alone anyone else's, which again makes sense. That said, I believe we have a bright future competing in global financial markets underpinned by strong and effective global regulatory standards. So he wants us to compete with Asia and the US, which has lower standards than the EU, and so to compete with these markets in the minds of these people like Andrew Bailey or whatever the hell his name is, he wants deregulation. Simple as. EU and UK counterparts are negotiating the terms of a memorandum of understanding over access for city institutions to European financial markets. Regulators intend to sign a deal by March, but the EU has suggested the UK must follow rules for a number of years without diverging. Again, pretty standard stuff. Mr. Bailey pointed out in his speech that it was up to regulators to determine which rules can be considered equivalent, as happens in other countries, rather than just following the rules to the letter, and it's going to be up to the UK and the EU to figure out which rules the UK has to follow. For equivalency, this is us asking access to another market, so that we have to play by their rules. That's how these things work. Asked whether the UK risks being cut off from the EU financial system, he said, I think it would be a mistake. It raises the cost of finance for everybody, including citizens of the EU. It will raise the cost of doing business in the EU, so I think it's a mistake. I mean, it's not going to raise the cost for businesses in the EU to do business within the EU. It's going to raise the cost for UK businesses and services to work within the EU, and that's what he's talking about here. But he's not saying it specifically because he knows how much of a tool he would sound if he actually said it how he meant it. I can't predict what will actually happen, but exactly because it's not within our control. Interesting. It's not within our control. I wonder whose control it is in, and I wonder why it's in their control. But I think we have to state the argument for why it's important to have global standards, global markets, and safe openness. If we all sign up to that, there isn't a need to go in that direction. But the thing is, the EU has more stringent rules than the global market. So it's up to us. If we want to do trade with services with the EU, we play by their rules and we set our standards high. If we want to do trade with, countries like Singapore, then yes, you can set the standard lower, but that does buy you access from other markets. That's how it works. It's not very hard to figure out these things, and the fact that this guy is the governor of the Bank of England does not fulfill me with hope, especially given that his statements are very political right now. And Mark Carney, whenever he said anything about Brexit, saying, oh, the governor of the Bank of England can't get involved in politics. So why is Andrew Bailey getting involved in all this stuff? Or is it the fact that Brexit is inherently political? Could that be the reason why? And Mark Carney, I miss you, bro, because although I probably don't agree with you on a lot of things, you aren't a monumental douchebag like this guy. But he's gone on to do bigger things and sitting on a board of some sort of financial thing. So yeah. Anyways, shout out to the great Canadian Mark Carney, and no shout out to Andrew Bailey, who's a massive fraud and doesn't seem to understand why the EU would not grant us equivalency. Is it because you want to move away from EU rules? Could that be the reason why, Andrew Bailey? Could it? Anyways, I'm going to leave it there. I've rambled on for a long time. People like this guy really make my brain hurt, and it does cause me pain. But we're going to leave it there. Let me know what you think in the comments below. Like, comment, share, subscribe, join the Discord, and hopefully I'll see you in the next one.